So, David, you're a bit of a investment guru. My ideas about investment are, well, do I put it in the bank or do I put it under the mattress? And then the big decision as well, do you put it under the inner sprung or the futon, maybe the hammock? So, I don't know, these are my big investment decisions. Are there options I might have missed?
There's no such thing as a risk-free investment. Even money sitting under the old inner sprung is going to be vulnerable to the ravages of inflation while it's sitting there earning nothing. So it's a matter of just working out what's sort of right options for somebody in terms of dealing with what their goals are. Today the interest rates are a lot lower than they were 10 years ago. And that presents some interesting challenges. You could sit in the bank earning relatively low rates of interest. If you've got time horizons that are a little bit longer than tomorrow, then there are some options available that allow you to just generate a little bit more income. And for those people in retirement, that's really important for them. And we've got a range of options that consider putting together portfolios of shares that are paying high dividends, for example, in New Zealand, and portfolios that include a range of different bonds and debt securities that are issued by a whole lot of different companies, all in a structured portfolio option. Alternatively, if you don't need quite as much income to live on, and young man, you've got plenty of years in front of you, then you're probably looking to grow the portfolio a bit more than just generate income, and that's probably more of a priority. So we've got a whole range of growth-oriented options available to use as well. So yeah, there's many different alternatives that can be utilised to enable people just to extract a little bit more level of return than just sitting in the bank or at worst under that dreaded mattress.
So let me get this straight. Like, even if I believed in the market and the stock markets are just going to go up, why don't I just buy a fund on the stock exchange directly? Why would I come to a financial advisor?
Look, financial advisors offer more than just investment advice. The well-qualified financial advisors in New Zealand offer services that go way beyond just simply investments. A lot of advisors have great knowledge on risk products, not just simple term life insurance, but income protection insurance. And for a lot of people, they overlook the fact that if you're earning money, one of your greatest assets is your capacity to earn money. Often it's overlooked as a risk that needs to be insured against.
So are you saying, though, that if I come to a financial advisor, I will beat the market?
Those financial advisors that use Grosvenor will use portfolios that we've put together that over the 15 years that we've been doing that have beaten the market after fees by about 1% per annum. And that's a significant compound increase in wealth. You compound up 1% per annum over and above what the markets have done after fees for 15 years, and you're about 20 to 25% ahead of what you would otherwise have been. And that's the measure by which we judge ourselves against that market index. If we can't beat that market by a decent amount, about 1% per annum after we've charged all of our fees, then we have no business. And that's the beauty of the arrangements we have with the advisors who use our platform. If they don't like what we're doing and we're not delivering them value, they can pick up all their money and they can walk away to somebody else with 30 days notice. So that keeps us very focused and very honest, and I think it's a good, healthy relationship to have.